Imagine waking up to find your bank account has grown overnight, all while you were fast asleep. Sounds like a dream, right? But for swing traders, this is everyday reality. What if I told you that you could do the same, even as a beginner? But here's the catch. Miss the basics, and you could lose it all. Ready to unlock the secrets of swing trading? Let's dive in. Yep, it's not all roses and rockets, but stick with me, and you'll learn how to navigate the market like a pro. The build-up. Let's start with the foundation. What is swing trading? Swing trading is all about catching those short to medium-term price movements in stocks, cryptos, or commodities. Think of it like riding the waves. You're not diving deep like long-term investors or speed racing like day traders. Instead, you're timing your entry and exit just right, aiming to maximize profits within a few days or weeks. Now you're probably wondering, how do you find the right stocks to trade? Here's the first rule. Stick to stocks with high liquidity and volatility. Why? Because these are the stocks that move. You want waves, not ripples. Use tools like stock screeners to filter by volume and momentum indicators to find the gems. But here's the kicker. Never chase every wave. Discipline is key. And speaking of discipline, what if I told you that timing when to buy and sell is the most critical part of swing trading? The rising action timing is everything. Enter too early and you might end up watching your money dip. Exit too late and you risk losing those sweet profits. So, how do you time your trades? Technical analysis. Learn to read charts, spot trends, and identify patterns like the moving averages and the relative strength index, RSI. Here's a pro tip. Look for breakouts when a stock moves beyond a resistance level. It's like fireworks signaling a potential rally. Now, before you go downloading 10 charting apps, take a breath. Focus on mastering one or two reliable tools first. You'll thank me later. But what good is timing without a solid plan? Let's talk strategy. You need to know 3 things before entering any trade: your target price, your stop loss, and your risk-to-reward ratio. Let's break that down. A stop loss is your safety net. It's the price at which you'll cut your losses. Always use one. And don't risk more than 2% of your capital on any single trade. Think of it as paying for market tuition. But what if the market suddenly turns against you? That's where mindset comes in. The realization, here's the truth. Swing trading is as much about psychology as it is about charts. Fear and greed are your worst enemies. Stay disciplined, stick to your plan, and never let emotions dictate your decisions. Remember, the market doesn't care if you're having a bad day. It's not your therapist. Over time, you'll develop the confidence and intuition to trust your strategies. And that's when swing trading becomes not just a skill, but a powerful tool for financial freedom. Ready to take your trading to the next level? The payoff effort will strengthen your edging. Check it out. And while you're there, if you're serious about becoming a successful trader, don't stop here. Check out our next video, Top 5 Trading Strategies That Actually Work, where I dive into advanced techniques to sharpen your edge. Click on the screen now, and I'll see you there. Let's turn your trading dreams into reality.